Good day, traders. Mindset Reset Tuesday, day 2. And I just had a fantastic workout and made a ton of notes to talk about today, day 2. So we're in the last few days of the month. And I want to talk about the idea of understanding expansion, contraction, expansion. We have some markets that are British pound, for example, 3 inside days. The indexes have stayed in a fairly narrow box Monday, Tuesday, other than the DJ30. We'll talk about that in a moment. Currency pairs, the yen and yen crosses were a great example, as I talked about yesterday, of taking volume up high day 1 and holding it there at the high of the day. And you'll notice the markets opened on a gap underneath closing price and proceeded to auction down for the rest of into the U.S. session. The Japanese yen took out the low of the day. And that brings us to the U.S. session. So we have Japanese yen in terms of currencies that broke out the low of the day, broke the low of the day level, triggering other time frame traders. The Canadian dollar worked its way down there, but the Japanese yen is an example of what I would consider to be the hot chick. So the U.S. dollar crosses have moved down. The Swiss franc was the worst of the 3. Meaning that it was just in a sideways range, no best trade setup candidate whatsoever for me. We had major red news at 8:30 and 10 a.m. But several traders hit the Canadian dollar on the reversal that started at 8 a.m. Which now coming to major red news. Now there's going to be days where we see very little reaction or as I said, the 4 types of first minute news candles. Very little reaction that prevented that market from just fulfilling its trade thesis in terms of positioning in at 8 a.m. if traders took that trade at the low of the day on the Canadian dollar. And EuroCAD and Pound CAD gave trades later, third hour, I believe, after the news. Same sort of thing, auction down low, but the Canadian dollar worked its way back up to closing price, continued to go higher. Now, day 2, in terms of risk reward on that pair, I don't know how much it moved from top to bottom, but the one thing to really understand, again, day 1, day 2, we're in markets now that are establishing the ranges. So some ranges are already set on Monday, and the markets haven't really expanded them at all. We have other markets that oil gave a perfect consolidation without taking out the high of the day. It reversed yesterday in a very strong reversal, a measured move, 200% range expansion of closing price to low of day range expansion. Working its way back up, targeting Friday and Thursday's high of day, high of week levels. It's inside of a previous day's range, but we're in a market now that's exploded in a range expansion on day 1, the opening range, consolidated sideways. It's just a day 2 trend trade. That's all that it was. Now the indexes, okay, so if you go back and look at the 3 indexes, the DJ30 closed lower on Monday than Friday's closing price. And the volume stayed underneath of Friday's closing price level. It broke down underneath of its own closing price just prior to 9:30 for a range expansion opportunity on the short side, targeting, I believe it was Thursday's U.S. session. Thursday's U.S. session, when I say U.S. session, I'm talking 9:30 New York Open on indexes, the lows of that session. We had major red news, I believe, on that day at 9:45 a.m. There was lows that the market went straight down to, and I believe it's working through those right now, or has worked through them. But in contrast to that, the S&P and the NASDAQ were on top of closing price, which was very close to Friday's, as well as the S&P was on top of the low of the day. The closing price was layered quite closely to the low of the day level. NASDAQ was slightly above it, but both gave pump and dump opportunities right off the bat for traders who are skilled. That was on the 1 minute time frame. Again, yesterday, same setup on the NASDAQ, 15 minutes after the market opens. Pump and dump, coil for an explosive move back down to the lows established. Today, they went to closing price. Closing price was the magnet that offered traders over 50 pips. I don't know which exactly each one gave, but it was easy collapse for a nail and bail on day 2. You're inside, but the market had pumped up on the 15-minute chart, made a lower low, pumped up into the open, On the 1 minute time frame, you've got, again, I just sit there for at least 15 minutes if there's a thesis, and then when the market gives me that engulfment or coil on the 1 minute chart to take that trade. A nail and bail, great opportunity. Gold, higher highs today, day 2. Yesterday was an inside day. Not an inside day setup. First minute of the news was non-reactive, didn't really do anything. And that also we're inside of Friday's peak formation high, peak formation low. It was an outside day. So I encourage traders to allow the bigger template to set up. Don't worry about how much volatility it has in trying to catch pips. Isolate a very specific best trade candidate setup, execute that trade. And on day 2, I can suggest that this is where traders get chopped up, not only just catching a poor quality setup, but then they can also get involved in revenge trading or get even trading, or if you've taken a loss or you're in a lose or averaging into a losing trade, or trying to keep trading in a market now that potentially, number one, may not go anywhere or may continue to do what it's doing. So if you're chasing a move, now you're either buying high or selling low, with potentially maybe trying to catch a move, catch some pips, or you're trying to counter trend a market that looks like it's going to reverse because it's up high or down low, and it continues to grind and grind and grind, and it may do so until the last few hours of the day. It may not, but day 2, they're still expanding the range, especially if it's broken out. Or if it's inside, now you're inside of a range, and that market may just consolidate into the close. Very dangerous. Understand when we get a 5-star parabolic opportunity how those set up. So if you're chasing stuff on day 2 and running the risk of potentially getting chopped up or trying to get back, you're going to maybe get beat up on a day 2, and you miss an absolute textbook, maybe Wednesday day 3, a Thursday reversal day 2, or a free cash Friday parabolic expansion that is not coming back. So again, go study the types of trades that don't come back. They move from the beginning of the session and they don't come back. They close near the extreme on that day. So the behavior part on day 2 is what you want to be most concerned about, because those are the days where traders can go back. So if you took for example, you took a trade on the NASDAQ, gave 50 pips, whatever it gave, back to closing price, the closing price magnet trade, and you've taken that trade, but it's over in 10 minutes, and that's a scalable setup. What I mean by that is it's a 90-10 scalable setup that can be rinse and repeats all the time. That type of opportunity, if you understand when in the template. So it's day 2. Okay, if that was day 2 on the backside, that market, you could be counter trending a market that's going to explode, or on a short covering day. So we get a large move on a Wednesday, a large move down. They might be covering shorts on a Thursday, and people are trying to trade back to the magnet closing price, and all it's going to do the rest of the day is continue to auction higher and higher and higher away from you. So it's important to understand when you have that opportunity, and it's a nail and bail, execute, take the money, get off the screen. If you go back and you're looking for other trades on the same market or different markets, again, we're on day 2. This is a type of situation where markets can just consolidate or continue to grind, or may not go anywhere, and it may trap or chop traders on both sides. You get in thinking it's going to go back up, or get in and think it's going to go back down, and the market just works its way back and forth in the same range and chops people up, and potentially does damage, not only financial damage to their account, but psychological damage. You could sit there for 4 hours, 5 hours, the market goes nowhere, and all you want to do is get out of the market. So my motto always is, I would rather be out of the market watching and waiting than in the market wishing that I'd never got in and wanting to get out. So remember, day 3, right? Free cash Wednesday, and the big daddy, if it presents, free cash Friday. Now we can get a free cash Friday trade on a Thursday. I know that will rattle some traders thinking, but understand when we get the setup, it could show up on we could get a large move. We have major red news Wednesday and Thursday and Friday this week. And so we have markets that we're at the end of the month, consolidating in a few markets. The ranges are narrowing, and that could be a precursor to some very explosive moves. So think about that. Understand the potential opportunities that are coming our way. And don't get chopped up between here and there. Save your bullets and understand when you get a scalable 5-star opportunity of when you can load in and hold that trade for its fruition. Max out the maximum amount out of a winning trade as possible and losing the minimum amount on a losing trade as possible. Don't get caught chasing stuff. It's day 2. Great question from a trader was, how is my son coming along? And as I mentioned to him, I've only told him about Wednesdays and Wednesday, Friday, day 3s, and also another trade setup that I've shown him that if he finds it to let me know, and because that can show up on a Tuesday or a Thursday as well, which we've covered. So fantastic opportunities today on oil, some nail and bail on indexes. DJ30 was a breakout trade opportunity. A couple traders hit that. That was a really, because that one has not come back at my last point of observation. And it just went straight down into New York session longs from, I believe it was Thursday. So again, on the indexes, those high-low levels from a U.S. session, 9:30 New York session, are very important because that cannot, in several instances, are where your real high and lows come from. Okay, so behavior is critical. Protect yourself at all costs. Protect your mental capital on the day 2. Don't chase stuff. Don't chase poor quality trade setups. And often we can get high week, low week opportunities on a day 2. We didn't get that. Well, there was a couple of opportunities. Again, the yen crosses right off the bat in Asia. They reversed in the U.S. window. Canadian cross pairs, late third hour opportunity reversals. Again, just for, I would consider these session scalps. It's day 2. We have major red news tomorrow. The market is just starting to now establish its boundaries and its ranges heading into Wednesday, day 3, Free Cash Wednesday. So protect yourself. 1% better every single day, traders. Keep it simple. And as I say, once you see it, you can't unsee it, which means filtering out garbage as well. Recognizing what a garbage chart is, not chasing stuff. And, you know, a trader asked me today, what did I think of the NASDAQ? And I actually wasn't really interested the way that I knew that at 9 a.m. or 9:30 a.m. we can always have an opportunity on the indexes, always. Because of the explosive nature, the type of, once you have your levels, it's dump and pump, pump and dump, or nothing at all. So, as I said, I shut everything down. I was focused on oil, the gift that keeps on giving yesterday and today. Gold, and again, no interest in that template. Sometimes we'll get a day 2 template that sets up with our opening range with major red news that sets up perfectly for a first bar trade that goes on a range expansion on day 2. And we didn't have that, so I was not interested. I know that market had a 50 pip high day closing price box, but it was, again, it's not, to me, trading that is not the same as trading oil where it explodes and it's driven by other time frame traders. I don't want to be caught in choppy markets. Even if it moves from A to B, I don't want to be in that kind of market. I want to be in a market that's going to go boom, explode, peel money off or hold on, set a level, leave trailers, whatever, but a market that's now going to continue on a range expansion, day 2. So have a great day, traders. Get out. It's quite warm weather here. It's March, not quite March. We're still in February, and it's shorts and t-shirt weather out. So have a great day, and may the markets go with you.